Hello everyone, once again my name is Ben and I'm a Forex trader and online trader. I've been trading for 7 years now. We are now going to the charts. I've been promising you all the time that we will see some things on the chart. So today we're going to see an introduction to that, introduction to charting and how you can be able to play some basic trades. We're going to look at that today. So I'm going to introduce you basically to the MT4 charting, where you can be able to chart, look at the charts, okay, and be able to make a decision on the market. So once again, welcome. This is Ben, and let's roll in. Let's get started. Great. So previously we looked at how you can log into a broker platform, the MT4 by the broker. And so today we are going to look at it practically, how you get started, how where do you begin from. In most cases, once you sign up with a broker, in this case, I'm using this broker. Once you sign up with the broker will be able to give you a platform where you can download the application where you'll be trading from, and that is called the MT4 or the MT5. So that MT4 is what we are looking at the moment. For you to log in, given the login details from the broker, you'll just have to come here and, after downloading the application, then come here down at the bottom right corner. Then there's a login option for you. Once you click on it, then indicate you're logging into an existing account, okay? Login details are here. You'll be given the login info, the password, and the server name. Then click login, and immediately you'll be given this interface. Once you're here, the first thing that you should do is to make your chart look presentable. As it is now, you may not be able to see some things. So one of the things that you need to do, there's normally a shortcut and the long route. The shortcut is you can be able to, you should use a shortcut to remove the grid. You can see the black and white boxes on the screen. You can either Control G or you can right click like that. Go to properties and then go to common. As you can see everything here, then go to common and then go to uncheck show grid. Just click on that, then click OK. Then your charts are more clearer. By the time you look at this, you'll be able to see a clear chart. It's not clogged up. It's not, loaded with too much for your eyes. You can be able to, interact with the charts very, very closely. And this is how you do that. This is, I gave you the Control G, or you can just go to right click, go to properties. There's also a shortcut for you to just click on F8, and then it will give you that where you can uncheck the show grid and your chart will be clear. So first, before we go into, we're looking at the basics of analysis and we'll get into that. But before that, you can actually also change the color, the background. It is black now. You can change it to white so that your charts will become, clearer again. Just right click on the charts, go to properties, and then go to colors. Then you can see the background is black. You can change it to white, okay? The foreground is white, you can change it to black, okay? Then grid, we've already removed it, so there's no problem with that. Bar up, meaning buy candles, okay? Bar up, we'll be able to see that. You can change that to green or blue, okay? Blue is normally the buy candle. Anytime in Forex or in trading, when the price is going up, then we are using blue color or green. Blue in trading simply means profits. So you can use blue. Bar down, you can use red. Bull candle, you can use blue again, because bull candle, remember from our previous lesson, bull market is a buy market. Bearish market is a sell market. So bull candle blue, and then bear candle, you can make it red. Then you say okay, and your charts are like that. So they are clearer. You can be able to see keenly. You can be able to see blue. You can be able to see red, and the chart is white. Everything is clear. Now, the last step you need to do is to just right click and save this as a template so that next time you open another chart, for example, right now we are looking at USD CHF. You can now use this as a template that next time you open another chart, what we mean by opening another chart is that by the time you open another currency pair, it will bear the same structure of the chart. So you can right click and save this as a template, come down to templates, then say save template. When you save the template, give it a name. When you call it default, okay, default, click save. Any other time you load the charts on this empty form, then what will happen is that you'll be using the same template. You don't have to go back to editing that chart again, to configuring it into the colors you want again. It will automatically open like that. So for example, let's go to Market Outlook, Market Watch, and be able to select any other currency pair that you want. For example, AUD USD, right click on it, then click on chart window. You see what happened? It opened a different currency pair with the same structure of the chart. So you don't need to go back into editing over and over again. So basically you do that, and that's how we can look at one more example. Let's look at GBP JPY, and now click on chart window, and it will be able to give you the same structure without you editing the same thing again over and over. So basically that's how you set up your charts, you log into the chart MT4, then set up the charts, and you'll be ready for analysis. And after analysis, then you're able to trade. So just looking at the basic things that you're able to do on an MT4 before you begin trading. So that's how you basically do it. That we're looking. So let's reduce these charts. If there are too many down here, you can just right click and close, right click and close, right click and close, and then you'll be left with one chart. Or because you can't be looking at all the markets at the same time. So in this case, we are left with Euro USD. Another thing that you're able to note before we go into what you're seeing on the screen as the candles, or what you call the candlesticks, is that let's look at what we have up here. What we have up here, we have what you call the time frame. We have M1, which stands for 1 minute, M5, which stands for 5 minutes, M15, which stands for 15 minutes, M30 stands for 30 minutes, H1, 1 hour, H4, 4 hours, D1, 1 day, W1, 1 week, and then MN stands for monthly. Now, these are time frames. What that means is that you're able to look at the chart that has, for example, if you click on H1, it means you're looking at a chart that has one candle stands for 1 hour. And we'll be looking at what that candle is in the very, in the next few minutes. But before that, H1 stands for a chart which has 1 hour time frame. When you go to D1, it means you're looking at a chart on a daily time frame. What that means is that one candlestick has been formed in 1 day. One candlestick has taken 1 full day to form. When you click on M1, it means you can see it's moving very fast because one candlestick forms within 1 minute. Right now, at the time of this recording, you can see it is 11:11. By the time we see 11:12, the next candle will begin forming. Just keep watching. You will see that. Now it's 11:11. By the time we go to 11:12, another candle will have to form, to start forming. So that means that we are looking at a 1 minute chart. Okay, 1 minute chart. It's still forming, it's still forming. It simply means that all this, whatever you're seeing on the screen right now, has taken 1 minute, 1 minute to completely form. The blues and reds that you see, they've taken 1 minute to form. And so currently where we are, the 1 minute chart is a very fast chart. You see the next minute has started, and so another candle has already started forming. So that is 1 minute. Then this is M5. It means it begins at the first minute to the 5th minute. It has closed. You go into the next candle. It will begin forming again. M15, M30, H1, H4. All these, they form the analysis that we do so that you can be able to make an informed choice on the market. You look at the market, with time after market structure. During market structure, we'll be able to look at what we call top-down analysis. And that has been explained very much in detail in our courses. So you'll be able to understand all these where you look at top-down analysis for you to begin looking at the market at the top, which is the higher time frame, the monthly time frame, weekly time frame, daily time frame, and then you turn it down to the hourly time frame where you'll be able to make a decision on the market, and then you can choose to enter the market on the smaller time frame or on the short time frame, which is minutes, in form of minutes, either 30 minutes or 15 minutes if you wish to go below that. So that we call that top-down analysis, okay? Where you're looking at the market from the top going down. Look at the market structure from the top, and then you can enter down there at the lower time frame, which is either H1 or M15 or M30, that we call it top-down analysis. So that is what we call top-down analysis in basic terms. You're moving from the higher time frame, coming to the shorter time frame, higher time frame to the shorter time frame. We call that top-down analysis. And then after this now, and I want to dive in so that we can look at what we call a candlestick. Okay, as you can see, you can enlarge here, you can zoom in, zoom out anytime you want. Okay, if it's not clear enough, you can zoom out as much as that. You can zoom out like that, and you can zoom in so you can see clearly what the candle is saying, because candles speak. These candles that you see on your chart right now, they speak on your screen right now, they actually speak. So a candle speaks of buying and selling. Okay, if you see a blue candle, in this case we've configured these colors with you, so you're able to see that blue simply means it's a buying market. Red simply means it's a selling market. Other people will change these to look like green and red, okay? Where green talks of buying, red talks of selling. So in this case, therefore, whenever you see a blue candle, what you see on the screen, the blue candle stands for buy and the red candle stands for sell. So it simply means that at this time, for example, in the market, the price started going up like that. Okay, blue, 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 and then red, red. The market started dropping down, and then blue, and then down again, red, red, and then blue, red, and so on and so on. So the market makes moves like that. So it moves by printing price. This is printing price. As you can look at what we have now currently, price is being printed. So this is a 30-minute time frame. It simply means that this candle started forming at 15 minutes ago, because at the time of this recording right now it's 11:15, so it started printing 11 sharp. So by the time it's 11:30, then this candle will have finished forming, and then another candle will begin forming again. So this is a buy trade. It's a buy, no, blue, 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 blue. Price was buying, price was printed as a buy. Right now is printing as a sell. So we use this to make a decision. We use this to make analysis. When we talk of analysis, technical analysis, this is basically what we talk about. So right now I want to look at what you call candlestick anatomy. Okay, how a candle looks like and what does it mean. For now, we know about the colors, that blue stands for buy, then red stands for sell, but how is it really? How is it formed? How is it formed? Why does it print blue? Why does it print red? Let's look at the anatomy of a candlestick right now. So I'll go back to pick anywhere in the market where we can use it as an example. So please pay keen attention. We want to look at, for example, looking at the market from this level going forward. Okay, we want to look at that zone. This entire zone, we want to look at it and be able to define what it means, okay, in this box right now. So beginning from here, beginning from this level, we have a sell candle, then a sell candle in red, and then buy, then sell. Now, you realize that whenever we sell, the price is moving from up, going down. So I want us to pick this candle as an example. Sell means the price is moving from up, going down. Therefore, a sell candle begins forming at the top and closes at the bottom. So in this example, therefore, this particular candle started forming at the top here and closed down at the bottom here. It did not begin here and closed above. It started from above and closed below. Okay, that is why the next candle, again, if you're keen, you realize that it has started from the bottom. It's also a sell candle, but it has started from the bottom. So it has also started from here at the bottom of the previous candle. This is the previous candle. It has started at the bottom of the previous candle. So it has started on its own. It has started from the top going down. You see that? It's moving down. And it closed down, another one opened again, closed down, another one opened again and closed below. Now look at the next candle. Look at the next blue candle or the buy candle or the bullish candle. By now, you should be able to use these words interchangeably. Buy candle, bull candle. It's the same thing. Sell candle, bearish candle. It's the same thing. Now here, at the close of this red candle, sell candle, or bearish candle, the next thing that happens now is that the buy candle begins at the bottom, because in buy, you're expecting the market to start from below going up. Starts from the bottom going up, down going up. So see what happened here, that the buy candle, therefore, that the price started from below and it closed above. Remember, in sell begins up, closing down. But buy, at the close of this sell candle, the buy candle opened. Then what happened? It closed above the beginning price. Price started below and closed above. So beginning below, closed above, and then another buy candle again opened at the close of the previous candle, which is above, begins there and closes above again. So below, closing above. What happened next? Let's keep going. The next sell candle that happened, occurred, as you can see, now it began from above, closed below. Above, closed below, above, closed below, like that, above, closed below. It went on like that until the market reversed on itself again, where we now had a buy candle, a bull candle, beginning from the bottom and closing at the top. You see that? Buy, top. Buy, top, closing at the top. A red candle happened again, started at the top, closed below. Then another buy candle, below going up, like that, all the way to the top. So this means that when we are talking about candlesticks, a sell candle begins from the top, going down, like that. Okay. I've started at the top, going down below this line. That's why it's in red. And then a buy candle instead begins from below going up. So let's even use blue now. Let's change this color to blue so that it can be a buy candle. Okay, blue, like that. It has started from below and closed at the top. So that talks of candlestick anatomy, where it begins and where it closes. A sell candle begins from the top, closes below, and it's red in color. A buy candle begins at the bottom, closes at the top, and it's in blue in color. Okay, and then lastly, now we've not completely finished everything, because this is where now it gets interesting. Now you realize that these candles that you see on your screen right now, they have something like a tail. Okay, there's a tail here, there's a tail here at the top and bottom, there's a tail here, there's a tail. It's like a tail, okay, an animal tail. We call that a wick. W-I-C-K. It's a wick. Okay. Now it speaks a different language in terms of charts. It speaks a different language, and I want us to zero in this level, on this level, so that we can be able to see what it means right here. Okay. We want to see what it means. Why the wicks? Now let's begin here on this red candle. What this means when you see a wick, it means that price started printing. As we already know, we are beginning with this red candle. Let's zero in on everything so that we get the right there. So this first candle that you see red, it means it started forming from the top and closed below. But in the course of doing that, this price started printing at the top. It sometimes went up fast, then came all the way down, and it closed at the end of that body. We call that a wick. Okay, this wick here, it left a wick behind. It simply means that price was forming, as it was forming, it first of all went up first. Sorry for that. Price first of all went up, and then instead of closing up there, it came all the way down, closed as a sell trade, but it also didn't go all the way down. It came back to close above here. So it left a wick at the top and a wick at the bottom. So this is what we call a wick. So it simply talks of price rejection. The price, when it started here, yes, it has closed as a red, but it started here, went up first, and it was rejected. It means when we talk of price went up, it means buyers entered the market. The market has been selling on this front. It's been selling. But then, at some point, instead of buyers taking charge of the market, the sellers came in and overpowered the buyers. And so the market started selling all the way down. Buyers came in again, and they pushed the market back up, leaving price rejection below and price rejection above the candle. So if we go with the same, it means that here on this candle that started forming the buy candle, price started here, yes, but instead of going straight to the top, it first of all came down a little bit. As you can see, there's a small wick here, and then now it went all the way up and it was pushed a little bit down. So it has left a wick at the top and a wick at the bottom. So that is how the market works. That's how the market moves. At times it prints, price directly to go up. At times it prints price directly to go down. At times it makes, those rejections. That it starts at the bottom before it goes up. It goes lower bits, comes back, leaving behind a wick, and then goes all the way up. Instead of closing there at that time, at the end of the time frame, it comes back below to close below, and it leaves a rejection at the top. It leaves a wick at the top of that particular candle. And those wicks, if there are many, they speak, they can help you in analysis. If you find price rejections at key levels, you can use that to make a decision to enter trade in the opposite direction of the wick. Or if they are in an area that does not really matter, it's not a key level. When we look at price structure, we'll be looking at key levels in the market. So if you see wicks at key levels, they are telling you price is rejecting, you need to take a reversal trade. If you see rejections or wicks at non-key levels in the market, it simply means that you don't really have to regard that. It's just another way of trading. It's just another way of price being printed. So it simply means you don't have to worry about that. For example, let's look at that at this level here, and we will use that as an illustration before we call off this trade. So look at this level, for example. Don't worry, we will teach you how to draw all this. But let's look at this level. Okay, price has been moving. It reached this level and it turned back on itself. Now it has come down. Forget about that gap. That gap can actually be filled up. Price always does gaps. Not always. At sometimes, sometimes or most times it leaves gaps during market opening. Whenever the market opens on Monday, remember Forex trades Monday to Friday. So at times, whenever the market opens on Monday, after the weekend, it does what? It begins with a gap. That gap is what we will discuss later on. For now, just remember that price was coming initially. Price was moving like that. Then it came down, as you can see. And then it went all the way up, as you can see that. And then there was a gap where price now started printing from below that. Okay, so we have that. And then lastly, price has come back to that level again. When price gets back to that level, we are seeing some wicks. Remember when we were talking about wicks? We can see some wicks at this level. It's actually a key level in the market. So we can see the first wick here, the first wick here, the third wick here, and immediately the price turned on itself and started going down. So this is actually basic trading, where you can use this as a decision to tell you where to go, where the market will go next. So it can help you react. Remember, in trading, you're either predicting or you're reacting to the market. So whatever type of trader you are, you're either predicting, you're able to predict where price will move to, or you're able to react whenever you see something happening in the market in form of candlesticks or price action. So when you see that, you can be able to react and say, okay, this is a key level. I've seen weak rejections. And so it means that this price is about to reverse on itself. So I can take a short trade. Okay. A short trade is a sell trade. A long trade is a buy trade. So short and long in Forex or in trading, they mean different terms. So again, that will be one of the terminologies that you learn today. When you say I'm shorting the market, it simply means you're selling. If you say you're going long, you're taking a long trade, it means you're buying. A long trade is not a long-term trade, as some people would say. A long trade is a buy trade. A short trade is a sell trade. So that's why I said, okay, I've seen pieces happening in a key level. I want to short this market. So basically what you've learned today, without going into too much detail, you've learned about the candlestick anatomy. You've learned about how to log into a broker platform, MT4, and be able to configure your chart to become, visible for you. And so lastly, but not least, what we'll look at right now is how to place a trade, and we'll cross with that. So assumably, you've made a decision that, okay, this market is going to sell, then all you have to do is do what? Click sell, like that. You've entered a trade. Where will your stop loss be? I think we talked about that last time. Just drag it above. Remember, if you're selling, then you expect that the market will go down, so your stop loss will be above. I always begin by my stop loss, not the take profit, because remember the 3 goals in trading, as we covered in our previous session. Our goal number 1 is to protect capital. Goal number 2 is to make profit. Goal number 3 is to protect both. So I've entered the trade. Now, the next thing that I will do is to do what? To set stop loss. Just drag the entry price to where you want stop loss to be. You've already entered your stop loss. And then your TP will be wherever you want the market to get to at that point. So in this case, if I want my take profit to be there, I just drag it there, and I've entered my TP, and I'm done with my analysis. I'm done with my trading. If it goes against me, I'll lose 1%. If it goes in my direction, I'm going to win 1%. But in most cases, my trading is always 1 to 2. So I have to go for 1 to 2. The distance between stop loss and entry, the distance between stop loss and entry, okay, that is your risk. This is your risk. So my TP will be about 2 times that. So my TP will be 1, and then it will be 2. So right here is where my TP will be. So that if I'm winning 5 trades out of 10 trades, and I've lost 5 trades out of 10 trades, I'm still profitable at the end of the day. So that is how you basically enter the trade, put your stop loss, put your take profit. And I've done this, I've not analyzed. I've just, I'm using this as an illustration, so that because this is a demo account, I've illustrated how you can look at the charts, log in, look at the charts, let the candles speak to you, let them tell you, are we selling, are we buying? And then if you are selling, enter the market, then put your stop loss first, put your TP, and you're done. That is how trading is done. Now we'll go deeper into market structure next time. We'll be looking at, how do you now analyze? But before we get into that, we are just giving you an overview. We can't give everything here because it is detailed. You need to understand everything. We're just giving you a big picture of what trading will do for you. Because if I win this trade, you can see that my TP here is over how much? $461. You can see that $461. That is some people's salary in a month. Okay, so this is big, and this is just one trade. We have so many currency pairs that you can trade. So many of them. If I go into show all here on Market Watch, you can see so many currency pairs. You can trade different markets. You can see crypto. Okay, this is Forex. Okay, this is gold. This is we call them indices. We have oil. We have commodities, okay? We have the stock market here. You can trade that on the broker platform, okay? We have crypto, see that? BTC USD. I can open that chart and I can trade the market as well because it prints price. Anything that can print price is tradable on the market, is tradable on the broker platform. So you can see that this is crypto, and so on and so on. we have different cryptos that you can trade on the broker platform. So this is big, this is massive. The opportunity is big. All you have to do is learn the ins and outs of it, and we have a course that can be able to take you through all these, where you can be able to, we have a basic course that goes for $300, where you'll be able to learn about crypto trading, forex trading, everything about online trading. When we talk of crypto trading, forex trading, all these trading, what matters is the skill. The skill is one. When you have, I'll use the same skill to look at the chart. You realize crypto, this is the chart in front of you, is BTC USD, is printing the same candlesticks. So you can be able to use your analysis to know when to buy and when to sell. You can still benefit from the market. You realize, at some point, we're beginning to receive feedback that I don't want crypto, I want forex. See, it is all the same. It is the same thing. It is that the skill is actually one. We're not teaching you on crypto trading at some point, then at some point forex trading. No, we are teaching you the basics, or rather the ins and outs of online trading. So, but where you will choose to trade, where you choose to apply is on you. We have teachers going to school to learn about teaching. Some teachers will learn about mathematics. Some teachers will learn about English. Will teach, that's what they will teach. But they are all learning as teachers, okay? They're getting different information as far as teaching is concerned, but then the whole concept, the whole profession is teaching concept. Now look at it that way, that here you're learning about trading. Where you apply it is different, but the skill is one. It's not that I went to a different school to learn about crypto trading. No, the skill is one. So we need to remove that confusion where people say, I want to learn about Forex only, I want to learn about this only. No. When we talk of the $300 package, it covers everything to do with online trading. Okay. In fact, we're giving you an additional bonus for you to learn about the basics of blockchain technology. But in essence, you're learning about online trading, because you can use the same info to be able to trade the market. Okay. You can use the same skill to trade any market whatsoever. So in this case, therefore, you've seen that actually you learning how to trade can benefit you, because in this case, I can sell BTC USD. I can sell Bitcoin that I don't have on the Forex market. I can be able to sell what I don't have, because I do that as a CFD, a contract for difference. I can buy what I don't need. You're just buying so that you expect the price to go up and get out of the market at TP, and you make profit out of it. So basically, the skill is what you should be looking for. So the $300 package will be able to give you access to all these at Premier Blockchain Hub, where you learn everything. In addition to that, not just learning, we go ahead to give you signals for 90 days. Trading signals. After you go through the lessons, you've learned everything, you've gone through the academy, you've done the practicals, you've signed up with a broker. As you begin trading from day 1 to your day 90 days, that's more than 3 months. You'll be able to trade with our signals for free every day, Monday to Friday. So all our winning trades will be your winning trades as well. So that will do conversion. Some people you can actually, depending on your capital, you can actually recover whatever you've paid us, for the lessons, the $300, you can be able to recover it in a week or in a month. By the end of the 90 days, you'll be on your own. You'll be able to trade comfortably, profitably, consistently as a profitable trader. So Premier Blockchain Hub is your choice for your learning and your trading partnership, where we work together to ensure that your trading goals are met. And this is who we are. So thank you so much for your time. I hope you join us on the next call. For now, make sure that you get a link, get to the person who invited you on this call to give you a link to get started with the academy. Get started now, because this is the right time to get started. Thank you so much. Welcome to Premier Blockchain Hub, where knowledge and skill meets opportunity. Thank you so much.